Hi everyone, welcome to a new video. This is Investing Thoughts number 2, and today I'm going to be discussing an interesting topic. Obviously, as we near the US presidential election in November, we're getting very close. It's an important time for investors. The market is looking at this election, looking at the uncertainty it might bring. And really I want to approach this from the point of view of a retail trader, of a value investor, should you care. If you're picking stocks, does it really matter? So in front of you is an annualized return chart during presidential terms, broken down by party and obviously each president and their year. Now you can see here that the average for a presidential term is 10.3% for the S&P. But what's interesting here is there's not really one party that's performed a whole lot better than the other. When you remove the outliers like Roosevelt and Hoover, obviously that's related to the Great Depression, then really, it's fairly consistent. Now you can see that actually Republican presidents have been worse for losing years. There's been 3 years of stock market, 3 periods of stock market loss under these presidents, compared to Democrats who have only had one. Again, these are annualized returns, so it's a little bit different. If you actually look at this here, this is a Forbes article, and they go through the actual return during the years in office. So in Clinton's 8 years, he achieved a 210% return. Obama achieved a 182% return. Now, Trump isn't anywhere near that. If you look at the S&P, if you look at a 5-year, if we go from January 2017, you're looking at about 53%. So Trump, obviously, despite what he likes to claim, is not the best president ever for the markets. But that's just a tangent, really. On the actual topic, does it matter? Well, you can see here that the party doesn't really matter. There's been good years under Republican presidents. There's been good years under Democratic presidents. So that party doesn't have a huge amount of influence. So when you're looking at this election, you're looking at Trump, you're looking at Biden, I say from this point of view, it doesn't matter. So if you're a long-term investor, I wouldn't even be concerned. I wouldn't be looking at this. Maybe I'd keep a cursory glance on it. But if you're looking at 1, 2, 3, 4 years out, you'll be at the next election. And really that's something to focus on. These are short-term events that get a lot of coverage. They're obviously important politically. But from an investing sense, I think you should be apolitical when it comes to these things. You don't care if it's a Republican. You don't care if it's a Democrat. Now, obviously, it's hard to remove your political thoughts from your investing. But I think you should do that. Just because you're scared of a Biden presidency or a second Trump turn, you shouldn't be taking risk off the table. Because likely, it won't affect that much. When you apply your politics to your investing, that's how you lose money. Or that's how you leave money on the table. You don't really want to do that at all. Obviously, there are added risks this election cycle. The possibility that Trump will completely reject a loss is sizable. It's scary to say that, but obviously because of the coronavirus, a lot of mail-in ballots are being used. Already, I think they've passed the number that were used in the last election. We're not even at election day yet. So that is obviously a concern. Trump has made all sorts of unsupported claims about the abuse of mail-in ballots. So that could be a risk. If he refuses to accept the result, that's a huge amount of uncertainty. The markets hate uncertainty normally, so I would imagine you will see a fall. Now, personally, I think this is an interesting thing to look at, because if Biden wins, and if there is a Democratic sweep, then they will be pushing out stimulus, possibly 3 different packages. An economic stimulus, an infrastructure bill, a green energy bill, that could have hugely positive impacts on the economy, on the markets. Obviously, that might come with increased taxes and other negatives for the market, but I imagine the stimulus will offset that massively. The markets, investors, we've been waiting for stimulus for months, second round of stimulus, and it hasn't happened. And let's be honest with ourselves, it's probably not going to happen before the election now. So yeah, I think that is an interesting option. If Biden wins, I think the markets will rally based on that stimulus approach. If Trump wins, again, we know what we're getting with Trump. Unpredictability. His focus on the markets will also probably be good for the markets. In a way, I'm not sure a normal election would be a lose here. The dangerous part comes from the uncertainty around will Trump accept the result. And I think he will only be forced to accept the result if it's a sweep. If it's clear that he lost, he won't have a voice. Now, if it's contentious, if it's close, then there might be a problem in that regard, and that would be bad for markets, in my opinion. So I think what you've got to take from this is ignore politics. Unless you're in a highly irregular scenario, which like right now, normally it doesn't matter who wins the election. Just as in the UK, the person who becomes Prime Minister, they will not have that much of an effect on the markets. Their policies will, yes, so effects on tax will probably affect the FTSE, but the person in number 10 has very little effect on the markets. Now again, that has special caveats. Boris, obviously, for Brexit, was seen as a stronger choice, I think, than Theresa May. Obviously, we're getting to the end of that now, and we're seeing where that's going. Probably to a hard Brexit in terms of no trade deal with the EU. But we'll see. Again, that's all very up in the air. I think there's a lot of posturing going on with that, so that'll be interesting to watch. But yeah, from an investing point of view, I think you ignore politics. If Trump wins, we might get a rally. Because you've got certainty. You know what Trump is. If Biden wins, I think you'll also get a rally because of the stimulus bill. And purely off this evidence, despite what Trump likes to claim, a Democratic president does not mean that the markets will fall. Look at the Forbes data here. The two top presidents for returns in the stock market are Democrats, Obama and Clinton. And that's interesting. Obviously, I think that goes against the public opinion, public sentiment around this. You think Republicans, conservative, do well for the markets, but that's not what the data shows. And that's what you've got to look at. Always look at the data. Don't go off gut feel or, it's Biden, Trump calls him socialist. Is it going to be really bad? Probably not. Probably the stock market's going to be fine. Yeah, we're probably not going to get a 210% or an 182% return. But in a 4-8 year period, you don't necessarily need that. Obviously, Trump's sitting down there at 43. I'm not 100% sure what date this chart was put together. I think, as I said, he's now sitting around 50. So that'll be an interesting thing to follow. I think he would love title of greatest president ever for the markets. He's a long way from that, as you can see. But, if he gets another 4 years, he might get there. It would have to take a lot. But yeah, I think, that's what I want to focus. All I want to focus on today, guys. Just remember that as an investor, be apolitical. In reality, it probably doesn't matter. Based on this graph, based on the data, it probably doesn't matter which party wins. So yeah, thank you very much for watching this video. And please like and subscribe if you enjoyed. And thank you.